All right, hello everyone. Thank you so much for joining our webinar today. And good evening to everyone. We hope that you have a good trading journey with the PU Prime. And in today's, we are going to discuss about US economy versus the global economy. In this topic, you guys are going to learn about, especially currently we are encounter the trade war. So in this topic, we are going to let you know about how strong is actually the overall US economic's performance and is it still sustainable if the US continue to declare war with different countries. So in this topic, we will discover more about how strong, what is the strength of the overall US economic's performance. So stay tuned to it. And we are going to start in 2 minutes. Wait for more people to join us first. So Chandrakan, hi. Good to see you again. And before we start, if you guys have any questions, you can try to type in the chat box. I will try my best to answer all of your questions. So hello, Amos from Sudan. We hope you guys able to enjoy. Hello, Chandrakan. Hope you're doing well too. If you guys facing any trading trouble or you guys need some of the analysis, a short analysis before we start the webinar today, you can actually type in the chat box. Hello, Yoshihiro from Japan. All right, so I think we are going to start our topic today. And in today's topic, we are going to cover about US economy. So in these sessions, you are going to learn about how strong is the overall US economic's performance. And we will show you some of the data performance to let you guys have a brief understanding as a comparison on the overall US economic's performance, GDP performance, and then is it still very strong that the US economy is going to fight and win the trade war? And then we will also cover things about the rising fiscal vulnerabilities, which means that as for now, we understand US is actually facing a big trouble, which is US as for now are encounter a high debt compared to others region. Also, we are going to let you guys understand the debt issue that the US is going to face. And then we will also let you guys have a understanding about why recently the overall trends for the dollar continue to drop aggressively. So you can notice that dollar normally can consider one of the safe haven asset. And when there is a high risk-off sentiment in the market, investors will normally shift their portfolio into the safe haven. But recently, we understand the global risk appetite remain weak, but why is the dollar still continue to be dropping and other safe haven assets, including gold, Japanese yen, CHF, continue to outperform? And we are going to let you guys understand what's happened to us, the dollar trend recently, and then we will come with the conclusion as how strong is actually the overall US economic performance. So now straight to the point here in this slide, we are going to let you understand the US GDP and growth. So as for now, everyone are believing that US economy should be considered the strongest compared to others region. And the question lies on, is the US economy truly untouchable? Everyone is actually going to think that no matter how aggressive the tariff will be implemented target on different country, US will almost always win the war. But is it true? Now, as for now, we can notice that market actually do not buy it, and it already reflects to some of the dollar trend. As you can notice that after US declare a trade war with several countries, US dollar recently, the overall trends for the dollar is actually dropped aggressively, as I'm going to show you now the dollar movement. So since Donald Trump win as a US president, and then you can notice that the overall trends for the dollar continue to drop, and especially after Trump make an announcement saying that he's going to impose 145 tariff targets on China. So this tit for tat trade war is actually going to trigger the movement. So now the question is already hyped up regarding on whether is the US still considered as the strongest economy. And then from that perspective, we also understanding that currently the overall US debt are actually rising. Later, I'm going to show you the US data, the debt data, to show you how serious is the US debt situation right now. And then I'm also going to let you have a historical understanding, how significant increments that the US debt is actually increasing. And then we will let you understand, is this belief still valid? Belief regarding on the US economy is untouchable. So these questions, I will let you guys to answer it after the webinar end. So now I'm going to show you the global GDP overview. I already put out one of the top 5 biggest economic countries, including US, China, Germany, India, and Japan. And GDP can consider one of the wealth of the countries, which means that when the GDP reading is very high, the country is richest, which means that the overall the country economic performance is good. So normally we'll try to observe the GDP reports to see what is the strongest countries according to the economy performance. So as we can notice on the ranking, US is actually the top 1 countries, which 30.51 trillion US dollar of the GDP performance. As you can notice that the overall US economic GDP performance is outperform a lot of different countries, as you can notice from Japan, India, Germany, and also China. So you guys might be confusing now. Also, questions already answered. US is one of the greatest economy compared to others world. But what we need to observe is whether is this US GDP growth is sustainable. Because if we are going to go through another data, which is the global GDP growth outlook, according to the growth perspective, just now what I show you is the overall total performance, but I didn't show you the growth. But if we are going to according to the growth perspective, you can notice that as a comparison since COVID-19, the overall US economics performance is actually much underperformed compared to China GDP growth as well as the India GDP growth, which means that even though US is actually a best economic performance around the world. But if we are going to turn the ratio into the growth ratio, you can be noticed that the growth is actually slowing down. Or to explain the layman's term, China and India, these 2 countries is actually trying to catch up the US economic performance. So China will be catching back due to the high growth along with the India. So this is something that rising the concerns that is the US economy still sustainable and will it strong forever? So this is the main questions that we are going to discuss today. So according to the growth, you understand that even though US GDP is the best, but according to the growth ratio, it will not the best and others countries are slowly catching up on it. So here is the data, the charts for you to see that the performance. So you can notice that US, which is the blue color, is actually underperformed compared to the India, which is the best, and then the China, the second, according to the growth. So emerging markets like China and India, as for now, is trying to catching the United States from GDP fronts. So now you guys already like start to worry that and questioning the main thing, is the US GDP or the US economy, is it still the strongest? And then not only GDP growth that we show that US strength have been easing, if you are going to according to the fiscal perspective or the debt perspective, we can be noticed that according to the debt ratio right now, US is actually the countries that experience the highest debt compared to others region with 35.29 trillion government debt compared to China, almost a double debt of the China 16.46 trillion dollar. So it's already shown that US GDP growth already slowed down. And if we are going to according to the debt perspective, US is the country who owe a lot of people a lot of debt. So which means that debt per GDP ratio 121%, which means that all of your salary, even more than your salary, would be required to pay back the debt from the US government perspective. The debt is actually their earnings is actually not able to cover their debt interest anymore. So this is a current situation right now, but you guys might be thinking that, oh, US should have the highest debt and then there shouldn't be any issue because there are still a lot of people are willing to borrow or lend money to the United States, even though US have a lot of debt, but market confidence towards the US economy's performance still good. But the overall reason why, now I'm going to show you the graph of the US debt from 2006 trillions dollar increase until more than $35 trillion. And then what make the debt increase sharply is two crises. First one is 2008 crisis, which is a financial crisis, because the government need to borrow a lot of money in order to revive the economy. And then 2020, US is actually experienced another debt hike, which because they launched a lot of COVID-19 stimulus plan. So you can notice that according to the charts, the overall US debt is actually increased sharply. You guys might be asking, so US debt keep increasing, doesn't it will affect the lender? And then doesn't even affect the overall economy? Actually, the answer is yes. We understand that debt ceiling to let you guys have a understanding what is debt ceiling. Debt ceiling is a limit that the federal government borrowing, which means that if I set the debt limit around 20 trillions, which means that when the government debt increase until 20 trillions, they need to stop borrowing the money to support the economy. They're no longer able to borrow the money because the debt ceiling already hit. But this already experienced multiple times before. Every time US already hit the debt ceiling, the parliament will actually negotiate and agree that they will continue to rising the debt ceiling, which means that this ceiling can be discussed and continue to rising, which means there will be no limit for the US debt ceiling. They can keep borrowing because the purpose of the US debt ceiling is they want to limit the ability that for the government to keep borrowing the money and use in the not a bad thing. But you can notice that US government is actually continue to discuss and lift up the debt ceiling. So it's something quite serious that happening in the United States right now because they have no limit on the debt borrowing. And then we understand that from 2009 to 2025, the US debt is actually increased from 10 trillions until 34.5 trillion, the latest one. So just because of the trade war, the US debt already rise by around $2 trillion. And we could be expecting this debt can be continue become higher and higher, citing that the overall, if US and China or the US and the world economy continue to fighting with each other. So according to the debt front, we understand currently US is the countries that exposure to a lot of taxes, but debt. So now in the normal situations, imagine if you are normal people, when you borrow too much of money, you're not able to pay back the bank, you will default. And then you will be like, you need to pay a lot of interest, you are not able to grow your real asset and etc. You will don't have enough money to do something good like the investment and etc. So normally high debt will affect the economy to grow more slowly and causing country to experience default. So we have been few historical cases. The most famous one is the Greece government default. So the government not able to pay the debt, and that's why they claim a bankruptcy from the bank. So after that, you can notice the overall Greece economic performance continue to slow down, and they owe IMF a lot of money. And just on the interest payment, they will require to pay a lot of interest to this debtor. So when I pay a lot of money to the debtor, all of the money I earn, I need to pay back as an interest payment. And of course, this is something quite negative towards the overall economy. And the questions as for now lies on why is the United States able to borrow so much of the money? Who give them the ability? So no matter how huge the debt they are suffering, but they can always find people to borrow or lending them the money. So why is that so? Dollar, because US dollar can consider as a reserve currency. And reserve currency means that all of the country, they will normally hold US dollar and put into their central bank. So when the currency drop aggressively, the central bank will start to use the reserve currency as a dollar and protect the currency. So reserve currency can consider one of the very important tools in terms of currency interventions. So the central bank around the world, they have reserve currency, and this reserve currency purely on US dollar. So this can give you the safetyness for the dollar because all of the central bank, no matter you are from Reserve Bank of Australia, Reserve Bank of New Zealand, Bank of England, Bank of Japan, you would still require to hold dollar as a reserve currency. So this already proven that a lot of central banks are still highly dependent on the dollar. But this is one of the reasons that give the ability for the US to continue borrow money from the world. And then US do have a very strong institutional credibility. So how to prove it is like every time when we encounter high risk or risk on sentiment in the market, including the COVID periods, including the global financial crisis, we can notice the overall US treasury debt performance is always good, because even there is a crisis, investors are still willing to borrow or lending money to the US government. This already shows that the global investors actually have the confidence towards the US economic performance, even though they have a high debt. So this is a previous situations. But as for now, the situation right now might be changes, because as for now, after US declare a trade war with several countries, a lot of people are going to fight back, and the most famous fight back is de-dollarization, which we are going to discuss soon. And this is going to explain the dollar trends. So what's going on to the dollar? Is the US prospects going to end? And now we are going to discuss on it. And this is one of the important stuff that we need to understand in 2025, because this means that if most of the country gather together and do de-dollarizations, then most of the central bank will less depends on the US dollar. When people are less depends on the US dollar, we could be expecting the US dollar is going to drop aggressively. So this is something super serious, because when US dollar drop aggressively, right, imagine all of your debt would be needed to pay. For example, from US, if I borrow money from China in RMB, I would need to change my currency from the US dollar and turn into the RMB. So if US dollar continue to drop aggressively, I would require more US dollar in orders for me to pay back overseas debt, including China, Japan, EU, or all of the global investor, because it will be suffering. Imagine a very weak dollar and pay, and you need to change your currency to a stronger currency in order for you to pay back that. So this is something serious right now, and everyone is actually quite concerned about it. And then we also understand that US as for now might be facing the stagflation, that we are going to discuss later about how trade war is going to increase the stagflation and the overall US economic performance. And then we will also discuss about the potential Trump political tensions with the German power. So from a previous discussion, we already understand that, even though US can consider one of the best economies around the world, but in growth fronts, it's actually quite negative. And in that front, we understand the US is the country who borrow money a lot from different regions. So now, when you borrow money from different regions, your currency value is super important, because you need to change your currency to pay back to different country. So why US able to borrow so much money? Because dollar is super strong. But what if the value of dollar start to drop aggressively? Then US might not able to pay back the debt, and this is the time, and this will be the risk that US might be experiencing some of the bankruptcy risk. So this is why you need to understand de-dollarizations. I know that even though in the short term, maybe it won't happen, but what if 5 years, 10 years, if the trade war are ongoing, investor would be required to protect themselves over this kind of trend. That's why we let you guys understand the situation. So now we need to understand what is de-dollarization. So as I discussed just now, de-dollarization is the thing that going to affect the dollar value. But how is it going to affect the dollar value? So de-dollarization is actually formed in 2024 with BRICS nations, including China, Russia, India, and Iran, and several countries. They actually gather together that mentions that I don't want the US dollar become my reserve currency. I don't want the dollar as the greatest, the strongest currency around the world. That's why I need to find some substitutions. I don't want to depend on dollar anymore. So these central bank, including China, Russian, and etc., they try to reduce the reserve currency in dollar. They reduce dollar dependence. So when they reduce dollar dependence as a reserve currency, they will try to change their dollar into other assets such as the gold. And this already explained why recently the gold price continued to increase sharply due to this de-dollarization. And then this is a key risk for the US economy, because when de-dollarization happens, nobody is going to depend on dollar anymore. We are expecting dollar is likely to be dropping, and then gold should be continue to going up. So strong dollar, unlimited debt capacity. If this de-dollarization happen, this era might be ending. So you need to stay tuned and be careful on it. And then now, US is actually another country that facing the stagflation. We are expecting it because you guys understand that recently Donald Trump or the US just declared a trade war with several countries, and this trade war is actually going to increase the product prices. So when the products or the raw material prices have been increased, it will likely to causing the inflation. And because of this thing, it's mostly from supply disruptions front. It's not because of no people is going to buy the thing. The overall reason why the price becomes so expensive is because of no people is going to produce the things. So the supply have been limited down because of tariff, no more raw material. Or this company is going to suffer from high cost of goods sold because tariff causing raw material price increasing, the company is going to raise the prices to cover back the raw material. So it will cause everything become more expensive and expensive. But on spending fronts, people are actually not willing to spend it. So this is something serious. So normally inflation will be happen when economy is hot. It's a normal situations because a lot of people spend their money, buy things, support the economy. That's why you can increasing the prices. So this is a normal situations where the Federal Reserve can consider increasing the interest rate, slow down the inflations. But the current situation is different because of stagflation. So the current situation is everything become more expensive. The company not able to supply more things, and people are forced to use a lot of money to purchase some necessary goods. So this is the place where the stagflations are coming. And when this thing happen, imagine the Fed are no longer have the power to increase or decrease the interest rate, because I'm going to have let you guys understand the situations that where normally inflation is very high caused by consumer spending. The Fed will increasing the interest rate, and that's why it will encourage people to save money in the bank, and they will also encourage people to maybe have encounter higher borrowing costs. That's why they will borrow less money to expand their business. So when they spend lesser due to high interest rate, then economic height will be slowing down and inflation will be slowing down in the normal situations. But as for now, the situation is completely different. We are the situations where your salary, put in the layman's terms, your salary increment are less, but the things that you want to buy have become more expensive. And if the Federal Reserve member want to increase the interest rate and control the inflations, then things will become worsen because your salary is stagnant and you still need to pay the interest expenses, the housing loan, the car loans to the bank. And you suffering already and things become more expensive. And what make it worse is the central bank even rise up the interest rate, which means that the borrowing cost that you need to pay to the houses loan, you need to pay to the car loans, all of the expenses will likely to increase sharply. So this is the thing, and this is the situations where people should be worried and suffering, and this is the overall economic performance, economic situations that we are suffering right now. And this already gives some headache for the Jerome Powell because he are not sure how can they control and make the economy well already. That's why you can notice Jerome Powell recently continue to stagnate their monetary perspective. They continue to maintain the interest rate, even though Donald Trump continue to pressure that US as of now is entering the recessions, people are suffering, you must cut interest rate to save the economy. But from Jerome Powell perspective, they don't want yet, because if they just cut interest rate, the cost of goods will spike up more. Imagine from supply fronts, already very expensive due to the high raw material costs, and from demand front, with a low interest rate, people will spend more money, and this is a time where the price will hike up more. So they are struggling. But recently, we have been shown some unstable political tensions in the United States. You can notice that Trump and Powell recently continue to argue with each other. US President Donald Trump keep pressuring Federal Reserve member Chairman Jerome Powell to lower down the interest rate. And recently, he even pressured he want to fire the Jerome Powell, but afterwards he denied the accusations. So Now we already understand that it's not just the overall US debt is high, and we also understand that the government, the central bank the US president is actually trying to pressure the central bank to fulfill his political tensions. So this is something that US might be going to enter a serious issue, because if when the central bank do not become independent, it will create a lot of things, issues in the markets. So Jerome Powell and Trump, this thing is also something that we must be focused, especially for trader right now. This should be one of the main thing, because recently Donald Trump keep pressuring on Jerome Powell to cut the interest rate. And if Jerome Powell do not cut it, and until certain moment, Trump pressure until Jerome Powell to resign and change another Fed chairman, then we could be expecting the dollar should be continue to dropping further, because when the chairman have been changed, and if they continue to listen towards the government, then they will likely to lower down the interest rate. When they lower down the interest rate, we could be expecting people will be suffering more in the US, because things become super expensive. From supply push inflation until demand push inflation, things become more expensive, people will be suffering. And then what make it worse is we can be expecting that the overall economy will likely to also increase concern about whether the Fed are still independent or not. So this is something that our main concern right now. So Jerome Powell, the relationship between US President Donald Trump and Jerome Powell is actually something that we need to understand right now. And then we understand from the economy perspective. So interest rate is also something that you need to understand, because interest rate is something that going to affect the currency movement. Normally, investor will invest the money, or the currency will normally higher if the central bank decide to maintain a higher interest rate. So we try to let you have a yield comparison. Yield comparison is an expectation of the interest rate. So we can be noticed from here. We are expecting, or we are noticing that in 10 years US Treasury yield, investors are actually expecting the Fed will maintain a higher interest rate along with the 2-year interest yield compared to others central bank. In normal situation, this is something going to support dollar moving up higher, but you can notice the trends for the dollar is actually slowed down. So US Treasury yield or the government bond yield, as I mentioned, is an interest rate expectation from the government. So normally institutional investor will try to bet the interest rate to decide whether the central bank is going to increase the rate or lower down the rate. So US Treasury yield higher, which means investors are betting that the Fed will increasing the rate or maintain a high interest rate. So as this kind of interest expectations, dollar should be the greatest strength. But if we are going to look through the dollar charts, you can see that even though investors are expecting the Fed will maintain high interest rate compared to others region, but US dollar recently continue to dropping back. So this already explaining that currently how serious is the de-dollarization things that's going to happen. And dollar strength the investor confidence towards dollar have been slowed down because of the things that we discussed. Even though central bank decide to maintain a high interest rate, but investors still do not buy it. So this is the situation right now. Now I'm going to let you have an understanding about the asset allocations that we can be focused right now. As I mentioned, now the US economy already slowed down, and investors perceive that the dollar no longer as a safe haven asset. So when dollar no longer have a safe haven asset, you can be considered other asset classes if you want to like a safe haven investment. Because normally in the normal situations, when there is a high risk in the market, some of the fund managers, some of the investor will decide to, okay, I invest in the US dollar, I will buy US government bond. So this is something going to support dollar going up. But after US declare a trade war with several countries, and there are a lot of things, bad things that are going to happen in the US, including high debt risk, including the de-dollarizations. In the short-term basis, if Donald Trump do not end the trade war, then we are expecting dollar might not be stand firm as the safe haven investment. So that's why you can consider other asset classes such as the gold, Japanese yen, and CHF. I show you the charts, then you understand. So you can see that recently compared to the dollar performance, gold price is something that going to outperform. Both of them are safe haven, but gold continue to be strengthened. And Japanese yen, let me show you the charts. Since there is a trade war, normally investors will invest in safe haven asset, and JPY can consider one of the safe haven asset. So you can also notice that this chart USD JPY continue to be dropping, which means that JPY continue to strengthen as a safe haven, USD JPY continue to dropping. So already show that the status for dollar already not that good. So now you guys might have a brief understanding. So now is the dollar, is the US still the best economy around the world? I'm going to ask you again later. So now, when there is things that happens, maybe high risk events going to happen, then you can consider safe haven assets such as gold, Japanese yen, and CHF. And if the tensions of the trade war start to ease down, maybe US and China make some deal about the trade war, tariff have been reduced, then you can consider high risk asset. So what's the high risk asset? Including the equity markets, crude oil, and even the crypto market. So this is something that worth for us to focus right now. So now I'm going to give you understanding that how the US trade war actually causing up the debt and weaken the overall US economic performance. So as a situation right, everyone is talking about the trade war, but nobody's actually know about what is the negative impact if trade war have been become serious and serious. So the first thing is, of course, economy will be likely to stagnate. So economy in US will become weakened and weakened because nobody is going to do business with the United States with higher tariff. So situation right now we're causing what? The US debt might be increasing higher. And I already showed you the chart just now. US is the country who experience highest debt around the world, and the debt is actually spiking up. If trade war continue to intensify, nobody is going to do business with the United States, and then we are expecting the debt will be spiked up even higher and adding more tensions to the overall US economic performance. So this trade war is actually going to rise up the risk for the dollar, and then trade war is going to happen. De-dollarization step will be even become the progress will trying to speed up because people are trying to angry about the United States. They might fight back. They will implement a tit for tat implementations. One of the effective way to punish the US is de-dollarizations. So if de-dollarization is going to happen, a lot of countries gather together. We are expecting the demands for dollar, the value for dollar will be declined. So it's not just the trade war negotiations that you need to focus on. You also need to focus whether these several countries is going to launch de-dollarization or not. Recently, Donald Trump is actually trying to stop this country to continue abandon dollar, but we are not sure whether this country is going to do hiddenly or not. So de-dollarization is definitely the terms, even though it won't happen right now, but definitely in a long-term perspective, this is something that everyone is going to discuss in the market if these BRICS nations really gather up and fight back against the US dollar. So if dollar continue to be weakened, and then we are expecting that become higher, there will be the risk that US might be start to enter the bankruptcy. So this is a situation right now we are trying to focus. And I already made a conclusions for you guys about the overall US GDP performance, government debt, de-dollarization risk, and then monetary policy and trade tension. So what we focus now is about the overall US GDP performance. Definitely US can consider one of the largest GDP growth compared with the countries around the world, but slowing growth after COVID periods. And we are expecting countries such as China, India are catching up recently because according to the GDP growth, you can notice the overall US economic performance is really not that good. So because according to the growth means that this country is actually trying to catch up. So whether US will going to continue to outperform or not, we will see how good is the Donald Trump performance. So this is something that also key things that we need to focus on. And then on that perspective, US are the country who experience the highest debt. So higher debt, we need to understand about de-dollarization also, because why US can have such a high debt, because dollar is strong, they can just print the money and pay back the debt. But if de-dollarization happens, the value for dollar will drop sharply and they will be suffering to paying back their debt. So this is something that we need to understand. In monetary policy perspective, as for now, US can still consider will hold a highest interest rates compared to the countries, including, I show you the U just now. So let me show you. So country including UK and EU and Japan, US can consider might be maintain a higher interest rate, but political uncertainty, especially Trump pressure on German power to cut rate, is something going to trigger some of the movement of the dollar. Because imagine if Donald Trump keep pressure German power to cut the rate, definitely the yield will be dropping, the interest rate will be dropping. So this is some political issue that you need to focus on. Monetary policy issue is super important in the United States because if they cut the rate, then asset classes such as dollar will drop, then safe haven asset like the gold will increase, and then equity market will be also beneficial on it also. So you can eye on the relationship between Donald Trump and the German power, and of course the overall US economic performance to decide the monetary policy decisions in the United States. And then definitely the trade tension is also something worth for us to be focused, because if there is a trade war aggressively happens around the world, US can be considered one of the most suffering country because of that. So I assume in the next 2 weeks, there will a lot of news regarding on the trade war to be released on the website, on the news, on the famous like Bloomberg, investing.com, and etc. So definitely it will move the market. I think maybe in these 2 weeks, that's why as a trader, you need to be more focused on it also. Okay, so trade tension is also something definitely that you should be consider as a greatest highlight. And here is our Telegram group, and normally we'll share about some of the market analysis inside, especially about the trade war, how the relationship, and what is a short market recap that to let you guys understand a quick understanding about the market before you start the day. So this is something that you can be also scan it and follow us on the Telegram. So this is all the most important things that we are going to discuss today. We hope that you guys learn something in today's webinar sessions. To summarize up, if do you guys still think the US as for now is still the best economic performer? But in my opinion, I think at the moment, yes. But in the future basis, it's really hard to say because we understand US as of now is still the best, but we also understand a lot of countries are trying to catching up, including India and China. And if the policy in the United States like keep play and on and off, then we are expecting the sustainability of the economic growth in the US might be not that good. So this is something going to affect the overall US economic performance. But what is good in the United States right now is we understand there are a lot of major tech companies that performing in the US, including Google, which is the Alphabet, Meta, Tesla, and a lot of different major technology companies. So whether this company is going to outperform and causing the US GDP growth rising or not is also we require to wait and see mood. And we also cannot rule any possibility that US have win a trade war with China. So if US really win it and US growth might be increasing, and then the China growth might be declining, the GDP growth might be declining. So this is also something that might be happens, and you need to bear in mind also. But in my opinion, right now, US dollar might definitely can consider still a good currency investment. But in the long-term basis, the status might be definitely affected, especially the dollarization. The status of dollar might be not that strong unless US really did something really outperform in the market recently. Okay, so that's all. And thank you so much for your support. Shout out to Amos, Maliga, Brimba, and Bogdan, and Ursoin. Yes, definitely we will also share you some of the recording for you guys, and we also share some of the news regarding of the trade war for you guys. So to decide whether US still the best economic performance around the world or not, I will leave it to you guys. All right, thank you so much. If you guys no questions, then I think we are going to end here. Assign definitely yes, we will share the PowerPoint to you. Definitely only for the people who join the webinar. You will receive the email and we will prepare the slide inside. Okay, so we hope that you really enjoy it and learn something today. All right, so if no questions, we are going to end here. Thank you everyone for your time. Have a good day. Have a good holiday also, especially on 1st of May. Thank you everyone for your time. Bye-bye.